Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's episode, we have Jorge Ganoza, who's the president and CEO and director of Fortuna Mining, who are a Canadian mid-tier precious metals producer with 3 operating mines and exploration activities located in Argentina, Côte, Guinea, Guyana, Peru, and Senegal. Now in its 31st year, Fortuna has undergone significant evolution, building a reputation for disciplined execution, operational excellence, and strategic growth. Under Jorge's leadership, the company has successfully expanded its geographic footprint, strengthened its portfolio through acquisition and divestments, and positioned itself for its next phase of growth. In today's conversation, we're going to discuss the leadership qualities required to succeed in the modern mining industry and how Jorge's own leadership approach has evolved throughout his career. We're going to look back at Fortuna's journey over the last 2 decades, explore the company's strategy to achieve annual growth production of approximately 500,000 ounces by the second half of 2028, and examine how recent portfolio optimization has strengthened the business. We're also going to dive into some of Fortuna's most important growth initiatives and the company's growing exploration pipeline across West Africa and South America. And finally, we're going to discuss Jorge's long-term vision for Fortuna and what investors, communities, and stakeholders can expect from the company as it moves forward towards the end of this decade. So, Jorge, welcome back to the podcast. How are you doing?
Rob, a pleasure to be here and anxious to dig to your questions.
Yeah, great. You were on the podcast probably nearly 2 years ago, or maybe even a little bit earlier than that. So obviously, probably a lot has happened since then. But for those listeners that didn't listen to that first episode, just wondered if you can just tell us a little bit about yourself, a little bit about your career, obviously how you got into the mining industry and how your career's developed to what it is today. So I'll hand it over to you.
Yes, absolutely. I am first a Peruvian national. I come from a mining family. My brothers and I are in the 4th generation. Our family has owned and operated mines in Peru and other places in Latin America for 4 generations, as I said. I'm a geological engineer educated in the U.S., and I have spent all my professional career exploring, developing, operating mines in the Americas and in West Africa.
Great. And I wonder if you can just give us a snapshot of Fortuna Mining.
Fortuna now it's a company on its 20th anniversary, and it's been quite a journey. I am a co-founder of the company, and for the first 16 years, we focused on silver, and we focused on Latin America. Fortuna's story begins with 3 associates, very little money, and big dreams. And today we're a company, producing close to $1.5 billion in annual revenue, employing 5,000 people across multiple jurisdictions in the 2 regions where we operate, Latin America and West Africa, generating significant cash flow and with big aspirations still, right? So certainly it's been quite a journey for us in Fortuna over the last years.
Certainly. Before we speak about some of the projects, what qualities do you believe are most important for leaders in the mining industry today? And how has your own leadership style obviously evolved throughout your career?
There are no big secrets here. First is people, right? I work with a collection of proven leaders in the mining sector, or CFO, chief operating officers, technical services, finance, So first, identifying the right people, being able to not only engage but retain over time the right leadership. Second, having a good eye for the right assets, right? This business is built on operational discipline, but that will only take you as far as the asset allows you to at the end of the day. So having a keen eye for the right properties, being a risk taker, but also be able to measure those risks adequately. All right. So I believe that those are the key. And one more I would say is discipline in a business that is exposed to the cycles of the underlying commodity. Remaining disciplined through the price cycles of the underlying commodity is key, right? And be careful not to give to the hype. We all work in this business for the days when prices are high and we're in a bull market. We all live for those days, but we should always keep a long-term view and develop the assets that can perform throughout the precious metals price cycle.
Fortuna is obviously now in its 21st year. If you look back, how would you describe the company's evolution from its early days in obviously Latin America to the precious metals producer it is today? Obviously, now focusing on Latin America and also West Africa.
In the early days, we had a very clear focus on Latin America and on silver. Being a Peruvian national, focusing on silver, Peru at the time was the second largest silver producer in the world. So it made a world of sense to focus and leverage our knowledge or relationships or networks to identify those good assets. Remember that, we're talking about 2004, 2005. Silver was trading at $3.40, I remember, right? No one cared much about it. So we were contrarians in a way, looking for assets back in those days. It also made sense to look at Mexico, which was at the time and still is the largest silver producer in the world. And it's a country where we have a lot of experience as well. So leveraging our knowledge, focusing on an unloved commodity or precious metals like silver at the time, and looking not only for exploration opportunities, but opportunities that we could turn into production rather quickly, speed to cash flow, I would say. And we've been successful. We were successful in identifying the Cayoma mine back in the day, the San Jose mine in Mexico. We were very successful developing them. Or San Jose mine in Mexico, which is a project that we took from early stages of exploration all through production, eventually became the 12th largest primary silver producer in the world. It's an asset that we took through the full cycle. We mined it to a place where we not basically exhausted reserves. We eventually divested of that asset back last year, early 2025. But it was really a company maker for us back in the day. So, that was the start of our journey in silver, focused in Peru, focused in Mexico. Then we expanded to Argentina. And in 2021, we made the strategic decision to expand our horizon to West Africa, which is a place where I had a keen interest since 2015. I believe that if you want to be a leader in precious metals, you have to have a presence in that part of the world, because just to help your audience put things into perspective, the largest gold producer in the world, Rob, is China. Last year, China produced about 360 tons of gold if we listen to the World Gold Council. The second largest producer in the world is Russia. The third largest, you find countries like Australia, Canada, and the US. All of these are continental-sized nations, right? Now, if you group the different gold-producing regions of West Africa, no? These are small countries. So if you group the Ivory Coast, Burkina Faso, the gold-producing region of Mali, which is southwestern Mali, and then you loop around Senegal, Guinea, that geography is a little bigger than the state of Texas in the US, right? And that geography produces more gold than China. When we look at it, country by country, the production comes from these small countries, but that geography is no bigger, no larger, is a bit larger than the state of the geography of the surface area of the state of Texas. And it would be the largest gold producer if we think of it as a unit in the world. So in my mind, you have to follow the gold. And that area has produced and continues to expand its gold production at a record level. And there is no other place in the world where you can achieve the speed to cash flow from discovery to development that you can achieve in that part of the world area. So in my mind, if you're in the business of precious metals, you must have some tolerance for geopolitical risk, and that is a good place to be.
Yeah. And obviously, based from what you said, that does make sense that you have to be in Africa if you want to be a leading gold producer, based on obviously the figures that you've just given. So that does make sense. And I guess that's the reason why you did pivot to working and operating in West Africa.
And let me add something here, Rob, to the discussion. You know, we're not just risk junkies, right? Because there is a higher perceived geopolitical risk in West Africa. Political instability, changing governments, young democracies. In some cases, we work with dictatorships. Let's call them like that. Yeah. Now, we're not just risk junkies, as I said. So the question is, what do we ask in exchange for that? The geopolitical risk we're willing to take? No, what do we ask in exchange? And the answer is, I find two answers. One is mineral endowment, rich deposits with very strong economics. And second is speed to cash flow. There is no other region in the world where you can, from discovery to develop, advance projects as fast as you can, and that's proven. That's proven over and over again in the West African region, right? So yes, you need to have some tolerance for geopolitical instability. You need to have some mitigate risks like we do, and we can expand on that. But the question is, what do we ask in exchange by taking that risk? And those are the two answers in my mind: rich deposits and speed to cash flow.
Yeah. And obviously, just, I suppose, carrying on from what you just said, what are some of the risks, political risks, and just risks in operating in West Africa that you've experienced, that you've obviously had to overcome? So, sort of any challenges? Because obviously, at the moment, West Africa is seen as a very high risk region at the moment. But you've obviously operating there successfully. What are some of the hurdles that you've had to jump over and get through to continue operating successfully there?
I'll give you a fulsome answer here, but first, I think we need to put things into perspective. I'm a Peruvian national. We have a big presence in Peru with our Cayoma mine, which was the first asset we developed. Over the last decade, on the last 10 years, Cayoma has had 8 presidents. So talk about political instability. Peru has had tremendous political instability. We operated in Mexico for 20 years. There is a dire security situation in Mexico, and we all know about what happened in some developing exploration projects recently, with kidnappings of and the general security situation in Mexico, and with a government that is somewhat adverse to mining investment. The Mexican government is not issuing mining concessions, new mining concessions, right? So to bring things into perspective, we operate in Argentina. We operate a very successful business in Argentina. Everybody wants to be in Argentina today, since Mr. Milei won office 2 years ago. But the prior decade, no one wanted to touch Argentina, right? Now, we go to West Africa. We have a strong presence in the Ivory Coast. Our flagship asset, the Seguela mine, is located in the Ivory Coast. And I would say the Ivory Coast is one of the best jurisdictions for mining that where we operate. I would rank it as top. We permitted that mine in 7-8 months. The capital efficiency to bring that mine into production was second to none. We were able to deliver the construction in time, on budget. So it is just a very good place for business. Politically, it's relatively stable. President Ouattara, it's on its third term, so he has been re-elected for the third time. We also operate in Senegal. Senegal, where our next mine is going to be built in Senegal, the Diamba Sud project, which we're going to touch on probably. And Senegal just had elections, and it's transiting its second year of a new young government. We were working in Burkina Faso, and we withdrew out of Burkina Faso. We sold the Yaramoko mine back in early 2025. Burkina Faso is a place that currently has a very dire security situation. There is an ongoing conflict. And our mine was a very profitable mine, running out of reserves. And based on the fact that the mine was running out of reserves and the difficult security situation, we decided to divest of the asset. So, we manage our risks more in a tactical way. And again, we decided to divest out of Mexico. We decided to divest out of Burkina Faso. We have entered Guyana in South America, with a new exploration project and expanding presence there. So, we move around within the two regions of choice, which are West Africa and Latin America. But the common theme to manage all of these risks, Rob, is to be very engaged with your host government. Very engaged.
This episode is sponsored by Mining International. In today's market, finding the right mining talent isn't easy. Mining International works closely with mining companies to identify and secure senior and technical professionals through a tailored search approach. If you're hiring or exploring your options, you can contact Rob Tyson via the show notes to start a conversation today.
If we speak about obviously Mexico, obviously following the investment of the San Jose mine in Mexico, and obviously your Yaramoko mine in Burkina Faso, Fortuna has outlined an organic path to producing at a rate of approximately 500,000 ounces of gold per year in second half of 2028. Obviously, with those figures, what are the key building blocks behind that growth profile, and how has the streamlined portfolio strengthened Fortuna's position?
One of the most exciting things that's happening to Fortuna right now is that we have positioned the company to control its growth path over the next 24 months. No? So there are two things that your audience should be cognizant of. First, the strong cash flows that we generate every quarter. In the first quarter of 2026, we generated about $174 million of free cash flow. And all of those cash flows are generated from mines where we can project the life of reserves for a decade, right? So we have the stability of long-lived assets and strong free cash flow generation coming out of those assets, right? That's the first thing. That is the base, the pillar. Now, we control our growth. Over the next 24 months, we can grow our annual production by 60% by delivering two projects. One is the expansion of our flagship mine, Seguela, in the Ivory Coast. And second is building and bringing into production what will be our fourth operating mine, the Diamba Sud project in Senegal. Those are projects that are technically low risk. We have the mineral inventory to do the expansion, so we are not dependent on more exploration success or an acquisition. We have the ounces. The projects are technically simple, socially accepted, and financially de-risked by the strength of our balance sheet. None of these projects is, huge capital. The expansion of our Seguela mine will be in the range of $70 to $100 million, and building and commissioning our new Diamba Sud mine or future mine, it's a project that could be in the range of $400 million.
The company's steadily advancing the Diamba Sud gold project in Senegal, with approximately $100 million allocated towards its advancement and the potential to deliver around 150,000 ounces of gold per year. As you move closer to the construction decision, what is the latest update on the project and what gives you confidence of its long-term potential?
First, start with your last. What gives us confidence on the potential? First, this is a project that through the drill bit, through exploration, continues to grow, and we continue to drill aggressively. We currently have a budget of about $14 million allocated to mineral exploration. We continue finding new gold zones and expanding, right? Second, we are to deliver a feasibility study that will make public before the end of the month. Before this month of June is over, we should have published the outcome of the feasibility study we're developing. But we're developing the feasibility study on the back of a preliminary economic assessment that we delivered in October of 2025, which we made public back then, that outlines a project with superior economics, a project that has an internal rate of return of 72% using $2,750 per ounce for gold price. No? So a very robust project, technically simple, as I said, socially viable, right? So we're very confident on the exploration potential. We're very confident on the economics, on the technical viability of the project, and it's about execution. We are currently expecting our environmental impact, environmental and social impact study approval. We submitted our study to the government authorities back in September, October of last year, and we are expecting to get that environmental approval to us this month of June. No? So again, it's going to be under a year to get an environmental approval. Not many places you can achieve that. And that is without cutting corners. I mean, it's just a government that recognizes mining as a key strategic pillar for their development and is open and willing to work closely with the companies in order to accelerate the development of these projects. Our project will be Senegal's next gold mine.
Looking at Seguela, you're in the process of completing a plant expansion study to approximately 2.3 million tons per annum, which could support production of nearly or more than 200,000 ounces of gold per year. What what are some of the key opportunities from expanding processing capacity there, and how does it fit into Fortuna's broader sort of growth plans of the company?
This is a mine that currently produces at an annual rate of about 170,000 ounces, and our plan is to expand it to 200,000 and above, right? We will achieve that by expanding the throughput capacity of the plant by close to 28-30%, let's call it, right? It's a brownfields project. It's just an expansion. We are also basically have completed the study. We will be publishing the outcomes of that study probably concurrent or very close to the dates when we release the Diamba Sud feasibility study, because both projects are advancing at the same rate, at the same pace. So before the end of the month or early July, probably, we should have the outcomes of that expansion study made available to the public. But I can advance to you that we do not see any technical challenges. The comminution circuit, that's the crushing and grinding, does not require any significant change outside of the addition of a regrind mill. And then we need to increase capacity in the wet circuit, which is the thickeners, the tanks, the piping. We have the real estate available to do that in the immediate area of the plant. So, again, technically very simple projects. And financially, this is a project that at most should be in the range of $100 million for CapEx. The execution time could be 18 months. So that places us sometime in 2028, early 2028. And we believe this mine can produce at a sustained rate of 200,000 ounces and above annually.
You've expanded your exploration pipeline through various ways. A joint venture with the Santa Resources in Guinea, an approximate 15% ownership interest in Well Resources in Côte d'Ivoire, and also an earning agreement on the Quartz Zone project in Guyana. What attracted Fortuna to these particular opportunities, and how do they fit in with the company's broader exploration and long-term growth strategy?
First, we're generating a lot of free cash flow, and we're reinvesting that money in our brownfields expansion projects within what's in the portfolio. But we always keep an eye about other opportunities in our regions of choice. And I want to stress that, because Fortuna is not a global player. We're a regional player in Latin America and West Africa. We do believe in geographic focus within the regions of choice, right? So within those regions, we're the largest shareholder in Awale Resources. We own 15% of Awale. Awale has a most exciting property package. They have made some significant discoveries. Awale currently has an option agreement on some of the properties they hold with Newmont, and I think that speaks to the potential of the properties to have Newmont involved. And we are the largest shareholder of Awale with 15%. So we follow that closely. Then Guinea, there are some areas in Guinea that are very intriguing to us. We like the geology very much for productive gold deposits. So we have a strategic alliance with the Soto Resources, and we're placing concessions in areas along with the Soto. Then moving on to the Americas, in Guyana, as you noted, we have done a deal with Quartzstone Resources. The Guyana Shield, even though we are in the Americas, is a piece of West Africa that broke apart from Pangaea and drifted away. This is shield geology. It's geology very similar to what we know and explore for and develop in West Africa. So we're very comfortable with the geology, and Guyana is a place that is it's in vogue these days. There have been some nice discoveries and new developments there, and we have been able to acquire a very exciting property package. It's early days of exploration for us there, but we're very excited about our presence in what we believe is the most exciting property.
Obviously, you're involved in both gold and silver. I just wondered if you can comment on the gold and silver market at the moment, and where do you see it playing out, I suppose, over the short to medium term, both in gold and silver?
Yes, with you, Ryan, here. You know, I always tell because people tend to ask CEOs and of mining companies, what do I think of a gold price? And I will tell you that it's ill-advised to ask a mining CEO, a gold mining CEO, about gold price.
And I
we
wasn't
all
going to ask you any
we
price
all think,
predictions either.
yeah, we all think it's going higher, right? But jokes apart, I believe that the fundamental reasons that have driven gold price to these record levels, historic record levels, remained, right? The economic imbalances that we see, the geopolitical tension, this struggle between higher rates, lower rates, rates, lower rates. So I believe all of these fundamental reasons that have driven gold price to current levels remain. And I wouldn't be surprised if we continue to see strong prices. But now our job in Fortuna is to make sure that if there is a correction, if it takes longer for prices to higher prices to materialize, we can still operate a thriving business. We operate a business that does not require record high gold prices to be viable. That is our challenge, and that is our strategy for the business, is to have a business that can perform throughout the precious metals price cycle. In low prices, in medium prices, in high prices, Fortuna should be able to thrive. And those are the type of assets we pursue and the operational discipline that we apply in order to have a business that can thrive in any gold market.
I want to talk about silver, something I closely follow. Do you think there is a silver shortage in the world currently and forecasting out based on the amount of silver that is being produced, but also what is going to be consumed now and going to be consumed in the future, with everything moving towards electrification, the increased use of AI, and I suppose other applications that silver is needed? Is there a sufficient amount of silver being produced at the moment and in the future for all the demand that it's required for?
I believe that industrial supply demand really becomes irrelevant, Rob, when you have financial demand coming in. It's like a tsunami wave that just sweeps throughout. And yes, silver is always a tight market. Fortuna has been for many, many years primarily a silver producer. That means that over 50% of our revenue came from silver. But I'll tell you that throughout the precious metals price cycle, if you're a silver producer, you wished you had more gold in your revenue. And that is why you see most silver producers eventually becoming gold producers primarily. That's the journey of companies like Coeur Mining, Hecla Mining, Pan American Silver, Fortuna. No? So now I agree 100% that there is a moment in time when there is a marvelous, profitable silver trade. And those times are like now, where you have a well-established bull market, because silver will outperform not only gold, but any other asset class. We were selling silver in the last quarter of 2025 at an average price of $56. Our average realized price for the silver we sold in the first quarter of this year was $84, right? So, yeah, I mean, silver lends itself to a marvelous trade, but I like silver, but it has to come from a silver asset that can perform not only at $80 or $50, it has to be able to perform at 15 and 20 as well, right? So, yeah, that's what I can say. We continue pursuing silver opportunities, but we look at the underlying asset, the size potential, the exploration potential. Yeah.
And lastly, looking ahead, what is the strategic vision of obviously Fortuna, and what should investors, communities, and other stakeholders expect the company to look like by the end of this decade?
In Fortuna, I would say that we are not so much focused on size, bigger for bigger. No, we are more focused on the margins that we can generate in this space of mid-tier producers, which is, I would say, a sub-million ounce per year producer. So we rather consolidate in the range of 500,000 to 1 million ounces of annual gold production. But as I said, with assets that can thrive in a high price environment, but still perform and perform well at lower prices, right? Assets that can offer the benefit of exploration potential, because there is nothing that creates value in our business like a discovery. So we need to see in the assets that we bring into the portfolio a decade in mining, competitive in the cost curve, exploration potential. Those are the type of things we demand. So more than getting bigger for bigger sake, it's about putting together a portfolio of assets that can have those qualities, no? So, yeah, I would say that you should, in 5 years, a decade, you should see Fortuna as a leading mid-tier producer with stability on its cash flow projections from a long life of reserves in the asset base with competitive cost, with expanded operations in its 2 regions of choice, Latin America and West Africa. Yeah.
George, thank you for your time. Really appreciate you giving us an update on Fortuna Mining. Obviously, speaking about your operations plus your exploration plays across West Africa and Latin America as well. If our audience wants to reach out to yourself or obviously certainly follow the company, obviously receive news releases, how can they go about doing that, and what social media platforms does the company advertise on?
The first point of entry should be your website. You can find all the information and contact at info fortunamining.com. So, our first point of contact should be through the website, where you can find all the relevant information and contact details. And we are available for all shareholders, and any questions, any conversations, we are always available.
Great. We'll include those all in the show notes accompanying this episode for easy access for our audience to reach out and obviously follow the fortunes of Fortuna Mining. So thank you again, and hopefully you can come on the podcast next year and give us an update, obviously, on the operations, and maybe we can speak about some discoveries that you may have made.
We very exciting news flow this year, so I'm sure we'll have another opportunity before the end of the year to update you on a lot of exciting things that are happening at the company with the development of these two growth projects.
Yeah, well, you're more than welcome to come on whenever those news breaks. You're more than welcome to come on. So thank you for your time again. Thank you for listening. Hope you enjoyed the episode. As always, appreciate your continued support. Please share this episode across Africa, across Latin America, but obviously across the world. We're speaking obviously about gold and silver, and obviously it's been in the news. More recently, both gold and silver, the precious metals bull market. I think we are sort of at the early stages of that. So obviously, Jules has explained what Fortuna Mining are doing in the different regions. So there's a lot of obviously things to take away and unpack from this discussion. So thank you again for listening, and until next time, happy mining.